Hi everyone, आज हम समझेंगे event management agreement. Before drafting any event management agreement, it is extremely important to ask some fundamental questions. What type of event is this? Who is taking the major financial risk? Who is controlling the vendors? Who will own the event concept and branding? If the event gets canceled, what happens to the money? If the guest count increases at the last minute, who will bear the additional cost? If government permission is delayed, whose responsibility is it? And what happens if force majeure occurs 48 hours before the event? The answers to these questions determine the structure of your contract. Remember, every event contract is different. Drafting must always be event-specific. In this video, we will cover how to customize contracts based on event type, practical negotiation points, and risk allocation strategies for event management agreements. An event management agreement is a legally binding contract between the client, who is organizing the event, and the event manager, who is providing the services. Its purpose is to define scope, money flow, risk responsibility, prevent disputes, and protect business reputation.
This agreement is important for all types of events: corporate events, weddings, concerts, government functions, NGO fundraisers. Always remember one simple rule: the higher the risk of the event, the more detailed the contract should be.
Contract modification depends on the event type. Corporate events focus on scope and IP ownership, while weddings focus on cancellation and guest count. Concerts focus on artist cancellation, liability, and insurance. Never copy-paste contracts. Always customize based on the nature of the event. The golden rule for contract drafting involves considering the event type, money flow, vendor control, risk ownership, and cancellation exposure. These factors determine your contract structure. When these are clearly defined, your contract becomes strong and effective. Risk allocation determines who pays when things go wrong. Main risk areas include financial, operational, legal, and reputational risks. Uncontrollable risks should fall under force majeure. Weather issues, force majeure. Government bans, either client risk or shared risk, depending on structure. If the vendor is appointed by the client, liability should be the client's responsibility. If the vendor is appointed by the event manager, liability may be shared or fall on the manager. Most importantly, protect cash flow first. Deposits should ideally be non-refundable. Milestone payments must be strict. Late payment penalties should be mandatory. Every agreement must prioritize the following clauses: scope of work, payment terms, deposit and cancellation, liability and indemnity, force majeure, vendor responsibility, insurance, dispute resolution. Never write a generic scope. Always include deliverables, timelines, vendor responsibility, the approval process, and the cost of change requests. Remember to add that additional work means additional charges. A good payment protection structure is 50% advance, 30% before the event, and 20% post-event. Be sure to add late payment interest, the right to stop work, and a, quote, no service without payment clause. Cash flow protection ensures business survival. The deposit and cancellation clause is vital for business survival. It must include a non-refundable portion, vendor cost recovery, a tier cancellation timeline, and rescheduling adjustment costs. Advanced professionals must include clauses like guest increase or decrease, venue change, government permission delay, artist replacement, weather backup cost, and event hours extension. The client adds last-minute additional work. Solution: scope expansion pricing clause. The client delays payment. Solution: milestone payment lock with penalty. The event gets canceled. Solution: tiered refund structure with vendor cost recovery. Professional negotiation. Never say, "We will manage everything." Always say, "Services are subject to agreed scope and commercial revision." Never promise, "Fully refundable." Always say, "Refund subject to vendor recovery and timeline." Before finalizing an agreement, ensure the scope, vendor list, and payment timeline are attached. The cancellation matrix, force majeure, and insurance responsibility must also be clearly defined. The final message is that every event has different risks. A contract is a risk management tool, and good drafting is essential for business protection. Remember that an event management agreement is a fixed-term, event-specific contract. It automatically ends after event completion and post-event obligations. It is not a long-term or annual contract. The nature of this agreement is event-specific, time-bound, and deliverable-based. The contract lifecycle moves from signing to planning, execution, post-event closure, and finally, contract ends. The contract doesn't always end on the event date. It terminates after final payment, vendor closure, post-event reporting, damage settlement, and IP or material handover if applicable. Sometimes event contracts extend for post-event audit, data sharing, or marketing usage. Other surviving clauses include confidentiality, IP restriction, and indemnity, which can last for years.